Hello everyone and welcome back. Let's talk about Sundial. 12 million shares were purchased for a 5% equity stake in the company. Monday, Valens, there was an interview done with Sundial CEO Zach. What all happened this week? I'm going to catch you up in this video. All I ask is just hit that thumbs up button. And if you'd like to contribute to the channel, I do have a Patreon link in the comments below that's going to give you exclusive access to the rest of the flower plays in the US market that I believe are worth watching, at what levels, and how to purchase those in OTC, which trading platform you can use. And if you just like to contribute to the channel, there's also a thanks button right beside the thumbs up button. Let's get started and talk about these SEC filings. The first one that I want to look at is this ETF Managers Group LLC. 12 million shares. This is not a small amount. So if you wanted to know just a little bit more about the ETFMG, they have core strategies. They've got these different sections in their product portfolio, leverage and inverse. They've got commodity, cannabis. This is the one that you might be interested in. There's different ticker symbols in here, and that could be where they're placing this. Now, for example, you'd want to click on and check out and see when it was updated, and potentially we'll be able to see Sundial listed in one of these. Of course, this one is focused on the US, but they could be fitting this under ticker symbol MJUS. Now, this hasn't been updated lately in like 2 months, and it looks like these are the top 10 funds that they're holding. What is your top 3 positions in here? And this could help you do your due diligence if you're looking at some of those OTC plays. Now, Sundial also announced earlier this week that they had an agreement with Valens, meaning they hadn't completed the transaction yet. And matter of fact, it talks more about this in the slides. Now, why did they do this? Is this shareholder dilution? Of course it is, but not that bad. And of course, they're going to work on doubling down in the Canadian market, showing that they're serious about getting and expanding that retail space, and also delighting customers and bringing them edibles and beverages and different things in the product portfolio that can't be duplicated in the black market. And I think that's important if they're going to actually ever become profitable in this business. Now, I'd hope to see them diversify a little more outside of things that would be impacted by the excise tax, and, you know, something a little bit more outside of the big supply demand issue for cannabis. But I mean, this could be a space with edibles and stuff in their beverage category that will allow them to become more diversified in an area that they are seeing future growth. So Valens, the opportunity here, if you go through the slides, they tell you everything you need to know here in the transaction terms. And that's why I'm saying January 2023. We've been through this before with Alcana, of course. You know, this is all going to get priced in ahead of time. So we're not going to expect any revenue surge at this point because it's all priced in up front. So we learned our lesson with Alcana. Now we're 3 times price to sales, trailing 12 months, just like Tilray is. They're almost the same. They're 2 point something something. If you go and check that out, I think it's been worked out. You could see that in Yahoo Finance if you go and check out the statistics tab. So they talk about this 2.0 manufacturing process, but I'm also looking at Green Roads right here. And I'm also looking at Australia. I'm not seeing anything in the current footprint for Germany or anything in Europe. So that's still something that we're waiting to see. Now, of course, we want the business to grow at a pace that they can sustain. So the next thing I want to take a look at is the combined Valens and SNDL 4.5% Canadian LP total market share. And it looks like they believe with those combined synergies that they could surpass both Tilray and Hexo. Let's see. I mean, it's going to be a competition up there, right? A bloodbath. So Canadian cannabis 2.0 market share right here. We've got Valens and SNDL. And of course, we keep an eye on Tilray and Hexo and what they're doing. So that is the competition. I mean, right there, they are in the lead right now. So can Sundial transform? And it looks like they are in a massive transformation. Now, an update to the waterfall for the net assets. We've got an update of US dollars. We're just going to stick with US dollars. We're going to do $2.59 per share. Total US price right now, $2.90. And we know that they are pricing this stuff in as soon as it's announced. It should be priced in We're not waiting to see this get completed. The market's been pricing this stuff in ahead of time. Ultimately, combined net book value, whether or not this has happened yet or not, I mean, growth gets priced in. So we're just going to say right now the market should be recognizing this, and this is what they're saying by the asset value waterfall. They should be recognizing this as $4.64, and we're sitting at about $2.90 right now. As far as when this was taken, I think the market may be seeing this as $2.90 even. So the balance sheet review, once again, they're going through here and saying, look at us, look how well we're doing. This is what we would look like if we were combined, but this isn't going to be until next year. But once again, this could be priced in. So just a reminder. Now, if we look down here at the enterprise value, I mean, this is August 19th of 2022 US, and of course, this is putting the two together. But I don't think any of this is fair until we look a little bit further down the road. But all in all, what I'll say is what we've seen with Alcana is this stuff gets priced up front. The growth, all of these things are taken into account in their models, and that could be something that we're seeing happen now. So Carrie with New Cannabis Ventures did an interview with the CEO. If you haven't checked it out, it was great. The biggest takeaway here was that Zach wants you to know that we do have a focus on the U.S. cannabis market. And if someone defaults with their loan, that presents an opportunity for Sundial, who's going to sit back and just relax because there is a U.S. sizable footprint of revenue that's been extended out to the U.S. market. So let's see how things play out this next year. Not in a rush, focus, double down on the Canadian market. I really like that note. That was my biggest takeaway. If you listen to it, let me know what your biggest takeaway is in the comments below. Let's take a look at the revenues for both Tilray, which has looked really solid, right? Look at these margins, these gross margins right here, 15 to as high as 27, 30%, right? And I just want you to lock that in, 153, 155, 168. Now, if we look at Sundial and the team that they're starting to build, the type of cash flow, 173. Now, what's killing them here is the gross margins, and the gross margins have to get better. And that's just basic efficiencies and also the medical play with Zenabis, right? I mean, the margins are going to get crunched, I believe, as the market gets saturated with Tilray. And these are realistic margins on the type of market that they're in. Now, I would say you would expect much better margins out of the liquor brand, Alcana. So maybe they're getting better margins in the U.S. market out of Sweetwater. But, the margin compression here is very interesting. And I see it getting more compressed on Tilray's side as medical cannabis gets more saturated. So if we take a look at the projections for Tilray, we've got these revenue targets right here. I mean, it just doesn't look like they're hitting these revenue targets, and that's why you've seen that price get crushed all the way down to $3.50. Now, of course, if SNDL can hit their revenue targets, and they have these last few quarters, you see, it was a surprise beat, right? I mean, this last one, at 176, we were here at least on the average estimate. We weren't on the low side, so I would say that's a big win. If we can stay on this trajectory that we're on now, at the end of this year, we still close with 1,144% up. But a lot of this stuff is getting priced in, 36% upside for next year. We'll have to see what happens if they've got that priced in. If we look at tip ranks, this is the upside. We've got $3.56 on the low side. We've got an average price target of $5.54. Let's see if that gets revised up or down. Now, it's been looking good right here for Tilray. And these are all the ones that I wanted to let you know that I keep on my watch list. And right here is Sundial. If we look at Sundial, good traction on the price action. And of course, this low period down here, this was the buy zone. I would say is under 262. You don't want to buy any higher than that. And up here, this is where we let institutions buy because, I don't know, they have to get approval or something. But this is your cap up here. We've got a red line up here at $3.58. We're not in a buy zone. If we are, I'll come back and let you know. That's all I've got for this video. If you did enjoy it, be sure to hit that thumbs up button. Don't forget. Thanks for watching, and I'll see you in the next video.